How's everybody doing? Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling, 25th of June, 2017. So here we go, getting ready for the last full week before the 4th of July weekend. So let's see what's going on. I mean, in terms of data, it's not an incredibly busy week, but we do have an awful lot of central bank speak throughout the whole week. So that will be something to keep an eye out for. So where are we? Not a lot is going on, really. I mean, I think the best way to look at it is if you focus on, if you look at the weeklies here, we got the SPY, right? So, you know, bulls buy the dip, sky high, push, 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 high, 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 buy, 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 and the bears are saying we got to drop. But, you know, it's a little bit of stalemate here, you know, third week where we're stuck in a very, very tight range, right? So until we get some kind of follow through, it's very, very tricky to read too much into it. I mean, on paper, you would say, well, clearly the market looks like it's, you know, showing signs of fatigue, but you know, all it's going to take is one comment on the wires and the market's going to rip higher. So it's very difficult to read too much into it. We still think that the healthy move is to the downside. And we still think that since something broke in the NASDAQ a couple of Fridays ago, you know, we could see that kind of aggressive move that could easily get traction across the board. So, but we'll have to wait and see. I think here, especially on the SPY, as long as we don't break back below this breakup zone, you know, it's going to be very, very choppy. If we break below, then we wouldn't be surprised to see a very quick move back into the 50 DMA. And then that will likely be the first interesting level to watch. You know, if you get strong buyers there, then we got game on. You know, maybe you're moving back into resistance and that'll be two-sided action there. But if, should we go down to the 50 and you find no bids, then, you know, then it could get ugly very, very quickly. So that's pretty much where we are. I mean, and it's a similar action if you look on at the Dow, right? So if you're looking at the weekly here, you know, negative close at highs and it's hovering. So we'll just have to see how this trades. But you know, it's just a little bit of pause, right? A little bit of pause. I mean, in terms of the YM, just to get back on the YM in terms of levels, what we've discussed in the past, what we've looked at is that basically any failure here, we would expect this to trade extremely heavy. And what we're looking at is that we still feel there is unresolved business potentially all the way back down into 2000, into this 200 DMA if we drop off very aggressively. But for now, that's still a ways away. Now, not a lot has changed pretty much for since the end of last year. We've been looking to be positioned long bonds and long gold going into pretty much every single weekend, with basically a change in tactical allocation the past weeks where we've been focusing only on gold, no longer on bonds. And again, here gold, as we said, we got a nice little reversal here, double top, came right back down into this choppy zone. And what we said is, heads up, we're coming into this multi-confluence zone where we've got these three moving average, you know, the 50, the 100, and the 200. And if it's going to base, if we're going to continue to see these buyers coming in, you know, still bids coming in on gold, this is where we would expect it to come in. Now, naturally, when you see this kind, when you see this kind of candle into the broader support zone, this is not a place where you want to get aggressively long quick, even if you're looking to build some kind of a long exposure here, because there's very good chance you'll get some follow through and get better prices, right? So here we saw this come all the way back down into the 200, 100, and we saw some extremely nice basing action where it gives you very nice asymmetric risk reward if you want to take a shot, because what you know is most likely if we break and close below this 200, probably that 50 is going to, these lows are going to come into play, so it's very aggressive. But the way you look at this is, you know, on this basing, you know, get long with a day stop, a day close stop below the 200 DMA. As long as it doesn't close below, you're holding your longs, and there you go, nice little pop. So here going into the week, we'll have to see again what happens on equities. But the way we look at this here is this is going to be an area where there was very aggressive selling. So we'll have to see how it trades here. If it can stabilize back above the 50 DMA, if it can stabilize back above this descending trend line, then we think we've got unresolved business here. And even if we sell off from here, triple top, we expect it to continue and ultimately move 1340s and higher. But anyway, 1340s, this target is still open for us. If early on in the week we can't hold above this 50 DMA, then we would expect the stops below the 200 to get challenged and the market to have to do some cleaning out, spring cleaning or summer cleaning, as it's officially summer here. What else we got? Something I'd keep an eye out on, which I think is particularly interesting, well, apart from the heavy tone on retails, is still on financials, right? Interesting action here across the board. I think it's been a tricky one because we expected this to sell off fairly, try and sell off fairly hard after this gap, but it got bid and broke through these resistances very aggressive light, so no follow through. So I think here this level is particularly interesting because the bulls are going to want to hold this for the continuation higher, maybe symmetrical move, but to try and test back towards this higher zone. Whereas if we get back on, you know, all the bears are going to be quite happy and we'd expect it to come right back down and take out stops below these lows. For now, we've cleared the upside. Daily closes below. We'd expect it to try and come back down and clear the downside. But again, I think it makes sense intraday, especially if you're trying to build or hold some kind of position on the equities, to keep an eye on XRT, on the financials. Another thing a lot of people, and again, it's nothing too interesting, so I'm just trying to go through a bunch of charts which people have written in and asked me to take a look at. Crude, what's going on crude? The way we're looking at crude is that, you know, as we've been saying for a long time, if this isn't bouncing on all the geopolitical risk, on the better day, etc., it's very, very heavy. So you got to be cautious here. The way we're looking at this is the healthy move here would be to get some kind of bounce, right? We'd call any bounce up into pretty much, you know, the 45 level very, very shallow and very aggressive, right? So any bounce back into the 45 that doesn't get an awful lot of traction, then we'd expect still lower, these lows to get taken out, and ultimately the market to try and come back sub 40s. Now, if we get above the 45 mark, if we get daily closes above the 45 mark, then it could be the start of something a little bit bigger. Then the traction and the squeeze could easily take it past the 46, 7 into the 47s, and then it'll get particularly interesting because what happens if you put these moving averages back, you know, it's going to be the breakout. This pattern, you're going to have all the moving averages coming in, and then we'd expect that to be very, very aggressive resistance. But through 45, if the squeeze is on, you might get another $1 or $2 very quickly, right? So I'd be careful staying aggressively short sub 45 because above 45, because you might be able to get a better price if you do want to stay short. But again, key level is just to see how it trades into these lows very early in the week. We'd say 39s to the downside and, you know, 45s to the upside. What else have we got? So on currencies, not an awful lot going on. Cable, as we said, if it was going to bounce anywhere similar to gold, right, it was going to try and find support here, 126, confluence of the 100 and the 200. So fairly nice basing action, positive close here after taking out those previous lows. So nice little pop. So here we're still stuck in this area where we would call this, don't get confused about velocity of move inside range. It's just a very choppy zone. So here what we'd look into the week is, as long as we don't trade back above 128 from a closing basis, you see a lot of selling coming here, resistance, support, you know, right? A lot of action here. So as long as you don't get a day close above, then still potential for a move back into the 126. Day close above the 128, we wouldn't be surprised to see a squeeze all the way back into the 130. right? Below 126, any new low possible. We expect it to trade very, very heavy. Above 130, don't think it's something we would be considering for this week, but 132 would be the next level. Kiwi, we posted a chart on Kiwi on the blog, and I think this is particularly interesting, even though it's probably particularly choppy. And here, what we were looking at was basically, before I forget, a lot of people asking me about Dollar Canada too. Dollar Canada is just all about the BOC, right? So basically, you've seen it puke a lot on basically assumptions that they're going to hike, market trying to reposition based on that. So it's just going to be a wait and see, apart from, reacting to crude moves. But, it's going to be for the BOC to deliver or disappoint. And, it's going to be finger on the mouse. If they deliver or disappoint, that's going to be the Momo trade, right? So here, what's interesting is, we've got these, back to Kiwi, sorry, we got these two interesting areas. So all things being equal, we'd expect to see some selling coming in here. Now, this might be a fairly crowded trade simply because everybody and their pet hamster and goldfish and grandfather and grandmother, whatever is short Kiwi here. So I think it may be a tricky one, or at least not one I'd want to trade with very, very tight stops. But I'm looking at this level very closely, right? And especially depending on what happens on the dollar, what happens on equities. But clearly, I would be cautious about getting long here. I think if anything, if you're desperately trying to get long, you'd probably want to get long on some kind of a pullback, not here. Here, we're going to go into the week saying we're not going to be stubborn. We're not going to have our stops layered anywhere where we can get clipped easy, but we're going to look for tactical opportunities to scalp to the downside, 20, 30 pips to the downside. And if we get lucky, then you might get a little bit of a runner. But the aim going into the week, going into Sunday open, going into Monday open, is to look for tactical shorts. So I hope that was useful. Again, there's not that much to update on. Thank you so much for all the likes, for sharing, and all the commentary. As always, if you have any question, any chart you want me to post, even intra-week on the Twitter feed, whatever, just hit me up on the blog. It takes 2 seconds for me to look at something, so I'm more than happy, of course. Not if I get gazillion requests, but the odd, I'm more than happy to post anything on Twitter. Or if there's something you want me to cover, something you feel is interesting, feel free to write in, to email in, and it might be spark some food for thought, or it might spark out an interesting discussion. Okay, have an awesome one. Thank you so much. Talk to you guys soon.